Amanda, we're only in March. It's been quite a year in the stock market already. How do you see the rest of 2023 playing out?
It's definitely been busy this year for sure. We do expect more volatility. I think, just when we feel that there's some respite, then we have things like SVB happening and so forth. I think as well there's a lot of dispersion in terms of views as well in the market. So the past couple of years we've had quite a lot of consensus, but obviously dispersion adds to volatility. So I think everyone needs to keep on their guard really for 2023.
Well, it appears, at least for now, that SVB has been contained, but there's still a lot of recession fears out there. How would a potential recession affect the way you're looking at the market right now?
Yeah, so we actually had our CIO day just a couple of weeks ago, and we've revised our recessionary outlook. So we do think that recessionary fears are over in Europe now, which is very positive for us given that we're a European asset manager. And then we do expect that there'll be further recessionary pressure for Q2 and Q3 for the US, but then that should pan out by the end of the year.
Where are we in terms of valuations? Because when you look at the S&P 500, they're still pretty high historically.
It's funny because, yeah, exactly. Markets have fallen somewhat, but the valuation level is still very high. We think that there's still an opportunity in value, in some regards, but we think it's important to think about quality as well. So if you are going to dive deeper into finding cheaper levels, then having the quality impact is also important.
Can you talk about the ETF sector in particular and any trends you've seen so far in the first quarter that might carry over to the second?
Yep, sure. So thinking about quality and value together, we actually have a fund called QARP, which is providing both of these exposures on US equities at the same time. We've seen a lot of interest there and some flows coming in. I would say that the resounding trend that we've seen has been income and dividend strategies. So just thinking about where cash is at the moment and what you're getting paid for, if you're going to take equity risk in a portfolio, it needs to work harder. So seeing a lot of interest in dividend strategies on the US equity side, but actually more so on the international equity side. So S&P is typically yielding around 1.7%, but if you look to dividend strategies on the international side, you can get something like 5.2% with our HDEF product.
However, there is geopolitical risk right now. So how do you assess things like Ukraine and Taiwan when you're looking at foreign ETFs?
Yeah, absolutely right. You should always be looking under the bonnet in terms of which country exposures, which sector exposures that you have. Like I said before, we think that the recessionary pain has kind of fallen through on European equities. And Asia, we do start to see some more stability as well. We actually think that there's some favorable opportunities in terms of trade dynamics as well between Asia and Europe. And then the energy crisis was not nearly as painful as we expected for Europe, just simply because we had a milder winter. Wasn't great for skiing, but was good for investors.
All right, well, thanks a lot for coming on and talking about it.
Thank you.